Hello, everyone, and welcome to another episode of Season 2 of our podcast, Law That Leads. I am very excited to have Gretchen Casey here with us today, who is a seasoned Level 2 mortgage agent with well over 2 decades of service in the mortgage industry. Even though she's based in Oshawa, she extends her experience through the Perch Mortgage Brokerage, catering to clients across Canada. With a commitment to securing the ideal mortgage solution, Gretchen thrives on facilitating home ownership and investment properties as well. She combines her profound understanding of human behavior with her years of industry experience to help as many people as possible, but she specializes in assisting self-employed individuals and others who face challenges in either securing a mortgage or other financial products. Gretchen's unwavering dedication and exemplary performance have earned her a number of awards, including the 2023 Pineapple Group Award, which recognized her among the top 10 in revenue, volume, and units. Consistently acknowledged for her outstanding service, Gretchen has been honored as well for 4 consecutive years now with the 3 Best Rated Award. While she takes great pride in her numerous awards, her most significant source of pride lies in the countless individuals she's had the privilege of assisting throughout her 2-decade-long career. Beyond her professional pursuits, Gretchen finds fulfillment in reading, self-exploration, and travel, and she cherishes quality time with her loved ones. She is a compassionate advocate for mental health. She actively supports organizations like Ontario Shores and Luke's Place, reflecting her deep-seated commitment to giving back to her community. Without further ado, welcome, Gretchen.
Thank you so much, Paula. Happy to be here.
I'm so excited for you to come and tell us all about these changes that are happening. It seems like in the middle of the holidays, people have to deal with new rules.
They're better rules, so that's a good thing.
Tell us a little bit more about that.
Yeah, so the federal government has come up with 3 new rules to help buyers get in the market. So the first one is changing how much you have to have as a down payment. Previously, you had to have at least 20% down if the purchase price was over $1 million. And now they've extended that so that if the purchase price is over 1.5 million, you have to have 20% down. If it's less than 1.5 million, you can have less than 20% down. So the rules are the first 500,000, you have to have 5% of 500, and anything over 500,000 up to the purchase price, you have to have 10%. So there's a formula, but it does help those who don't have big down payments get into the market sooner.
Yeah.
So that's the desire why they made that change. A second change they made is extending the amortization. So the amortization is how long you spread your payments over. So most people may have like a 3 or 5 year term, but the payments are still spread longer than that. They're spread over previously 25 years on an insured mortgage. Mm-hmm. Now they've extended it to 30 years. If you are either buying a new construction, new build property, condo, home, any kind of home, or if you're a first-time buyer. So first-time buyers, it doesn't have to be just new construction. It could be an existing property. And first-time buyer, there's 3 things that they consider first-time buyer. If you have never purchased a home before, that would be number 1. Number 2, if you have not owned or lived in a primary owner-occupied residence for the last 4 years.
Okay.
Or also, if you're experiencing a marriage breakdown and you are separating, you can qualify for the first-time buyer. So they're trying to help people in that situation as well.
Which is great news because, as you know, I practice family law as well. And I think it's very important to provide that opportunity, especially when there's domestic violence involved and things like that.
That's absolutely, yeah, really important to help those people get into homes if they can. Yeah, makes sense. Yeah, and
there was a third point.
There's one more rule. The third rule is that starting in January, if you want to add a unit to your home, so if you already own a home and you want to add a 2nd, 3rd, or 4th unit to that home to rent out, there's a program to help with that financing. Previously, if you wanted to get financing to do that, it was more expensive and lots of fees. So now they are supporting that type of financing up to 90% of the completed value. So
Okay.
previously, you'd have to pay other fees, and as completed, meaning the value now plus the value of the improvements, the construction costs, that will be your new value, and they'll go to 90% of that new completed value.
That's great. And how do you think all of this is going to play in the Durham region specifically? Do you think, because I know I've myself lived there for nearly 2 decades now, and I know you do as well. And, a lot of our client base is there, but how do you think it's changed? Because from someone that lives there, I see a huge surge of more homeowners in the Durham region, especially after COVID. Do you think this is going to assist?
It absolutely will assist because prices are going up higher and higher and above that 1 million mark. So it will help people. It will help them have that 30-year amortization rule will be very helpful in terms of qualifying. It still won't take away the fact that you're going to have a certain amount of income to qualify for these mortgages. So if you're just living on one income, it might be difficult, or it's easier if you have 2 people who are employed, or you're receiving a parent who has pension as well living with you, or you have a gifted down payment. Those things will help if you can't meet the criteria even with these new rules.
What else I know you assist self-employed individuals all the time as well. So how do you assist that sort of
that market?
people?
Yeah. So a couple of things is that sometimes if they go to a bank, even the people at the bank may not know the existing rules they could use at the bank to help people qualify for more, using not necessarily the amount on their T1 general document that they file.
Okay.
And with working through a broker, we have alternative lenders who are able to look at the bank statements and say, income coming into your account for your business is $100,000. We don't have to decrease it down to how much you're showing in your tax return. We can just have a few write-offs and remove those expenses from the number and use a higher income number. So it helps people as long as they have at least 20% down or 20% equity in their home if they're refinancing. And the rates are not that much higher. And it's not private lending, which some people think, oh no, it's going to be extremely expensive, but it's not. It's just a little bit more expensive.
And that private market or the non-private market, do you feel that's going to continue decreasing, or how do you think the interest rates are playing into all of this?
I don't think it's going to really rapidly decrease private and be alternative lending, because there's still a lot of need for that, because as long as you have higher prices, you're going to have people needing something above and beyond what the government plans are offering. But yes, you are right. The fact that rates are coming down is definitely going to be helpful for everybody.
So of course, interest rates are a hot topic. And I feel like they have been since earlier this year, because we had the first drop in April, I think it was. So tell us a little bit more about what the trend is, or what have you seen recently, and how it's going to shape the market.
Yeah. So one thing that's happening is the Bank of Canada, which affects the variable rates. They made a recent drop of 0.5%. And there's another announcement in December of what's going to happen and affects the prime rate. It's called the overnight rate, which then affects the prime rate. So if you're getting a variable rate mortgage or a line of credit, which is also variable rate, this will affect you. And right now they're saying maybe another 0.25% drop. The reason it's not going to be as aggressive is we're seeing things, not uncertainty about what's going to happen with the U.S. and tariffs, what's happening with job numbers, the CPI, what's going on in the economy. So inflation did go up in October, so we might not see as much of a drop, but generally the trend is going down over time. The fixed rates are different. They are not based on the same thing. They're not based on the Bank of Canada announcement, and they're based on the 5-year bond yield, which at the moment has been going up. So people assume rates are going down across the board, which is not accurate. The fixed rates had been coming down. Now they went up a little bit. They're kind of leveled off at the moment. So it's very important to watch that bond yield, because once that starts coming down, then the fixed rates will come down again, but not until that happens. You see one-offs where maybe one bank decides it's their year end and they want to bring in a bunch of business and they might have some kind of a rate drop, but it won't necessarily be across the board to all the different lenders.
Wow. And that could be a lot of information for somebody that has never purchased a home before, never gone through getting a mortgage, or even newcomers that, let's face it, most of the world, you have to have the money to buy the home. The mortgage is kind of like a foreign concept. The interest is kind of a foreign concept. So how do you deal with that? Especially in Durham region, I find there's such a surge in our population as well as a surge in newcomers. So how do you find your advice changes based on who the client is?
Yeah, I think that's really important. I think it's answering questions, giving a lot of information by email and verbally, and being prepared to do it more than once, perhaps, because there's so much to take in. A lot of people aren't going to, hear it and take it all in at once.
Right.
And it's interesting you mentioned about new to Canada, because I have a couple I'm working with today who has an accepted offer to purchase, but we're running into some challenges because of when their work permit expires. How much do they need down? Is it going to have to pay an insurance premium even though they have 20% down? So there's some things to work through. So I think just being available to answer questions and as much as possible educate through things like your podcast, and put some information out there so they know there are people who can help them and answer the questions and help them through the process, and be patient and understanding. And then also, like you say, first-time buyers, it's all new. Or if you haven't bought in the last 5 years, it's new. There's so many things have changed. So
Exactly.
I think it's very important to understand that and want to help people.
Of course. And we talk about that here all the time. It's so important to have the right team of people, because if you're just going to do this, I can't even imagine someone that would do this themselves, but do it with just, not the right team. I can't even imagine what the repercussions of that could be. Even myself being, if I were to purchase a home today, I don't think I could do it without a mortgage broker. Yeah. There's just so many intricacies to what you're saying. And especially with the immigration side of things.
I love that I'm a broker because I don't just have one box,
Exactly.
I'm not a bank where if you don't fit in this box, oh, well, good luck. Like I can evaluate the situation and maybe we start thinking, okay, we could do this with a bank, but then something comes up. Oh, wait, we're going to shift gears and go to this other lender. It's very satisfying to not just have to say, oh, yeah, sorry, doesn't work. Good luck. So.
Yeah, and you're really there to think outside of the box and find the solution for that client. So do you find your job is getting harder lately, or do you feel, yeah?
I'm going to say yes.
Yeah.
Through the years, it's got, I would say, kind of has ups and downs because new rules will come out or new things happen. And some of them are very easy to adapt to, especially when they're positive. Others not so much. Or, I work with investors sometimes. Oh, now there's going to be, potential capital gains, or there's going to be different things. Just trying to keep myself educated and up to date takes time. But at the same time, I'm passionate about it. I love it. It's fun. It's a challenge, and being able to go, oh yeah, I got it. We figured it out. We got it done. And whereas the person maybe thought this isn't going to happen, or I'm going to have to wait a year or two, and it's very rewarding.
Yeah, I can imagine. And instead of having someone wait for so long, not only you're providing that solution, but at the same time, like with the added units and things that are being allowed or permitted now, granted, there's the side of the municipality and having to figure out all of that. But how is your advice changing based on the new rules that when you purchase a property, or not even purchasing, just getting the financing to add units to your current property?
Yeah. So as you and I were talking about before we started this interview, we were discussing that not every municipality or city is the same.
Right.
So although they may be told by the government, you need to now allow up to 4 units, they're taking their time. I won't say that they're not all taking their time, but some of them are a little slower of adapting to that and allowing it and giving out permits. And that's a big part of the process. So if somebody comes to me and says, I've decided I want to add a unit, can you give me the financing? Possibly, and let's review it, but you need to have upfront if you don't already have your permit, you need it, you're going to have to get the permit, you're going to have your plans, you're going to have to make sure you're offset from the street, from the neighbor's house, all of those things have been considered. If you're going to be, potentially adapting the floor plan, all of those issues, and some of those maybe aren't going to be okay in this program. So there is definitely a process, but they need to have those things up front, and they need quotes up front so that when the approval is given, it's based on a review by the lender of those quotes to say, okay, you're going to spend $100,000. We've looked at it. We think that's only adding $80,000 in value, for example. So it's not a slam dunk just because you have a quote for the work.
Right. And then typically, have you seen a case where the permits are not there, but they've just applied with the town or the municipality? And then how does that work with the financing? Or is it sort of a big no-no, you need to have the permits first and all your stamp drawings and all of that in place?
Well, for this new program, which doesn't start till January, I imagine it will be that you need things up front because they're giving an approval based on something already in place. If you're doing other construction financing to do improvements separate from this program, yes, you could potentially get some numbers, but until you have, you can't really get a full approval without the full plan in place. So it's more just a pre-qualification, not an approval.
And how does that work with those two different concepts? So the pre-qualification and the approval, how long does it typically take, or is it on a full case-by-case basis?
Well, generally, like if you're getting traditional residential, not commercial financing, and if you've got everything up front, it could say 3 to 4 weeks could be a possible timeline to get an approval and get funds.
Okay.
If it's something, though, that's going to be a little more complicated, it may take longer. And also like getting draws. So when they do construction, people want to take draws so they can pay their contractors through the process.
Right.
The draws may be more flexible with some lenders than others. It's how much they're willing to lend and at what points, what stages. This new program, we don't have all the parameters yet of how that's going to work.
Yeah, which must be so difficult for you because I'm sure you're getting all the questions and you're sort of in the space where you don't really know how to answer.
I'm getting good at saying, we don't know yet.
Yeah.
I'll tell you as soon as I know. As soon as which might not be till, January, the day before it's announced, we'll see.
So I guess the moral of the story is plan ahead, work out what you need to work out with the paperwork and engineers and all of that, the town, all of that, and then come to you for the financing because it doesn't sound like it's...
We do know, I think there's going to be I believe it's going to be a 0.2% premium added to the insurance premium. So it'll be a little more expensive than just your regular refinance, what they call refinance plus improvements. If you're just like going to finish a kitchen, for example, it's going to be a little more expensive. We know that.
Oh, and how does that work?
So there's an insurance premium added to the mortgage. So this premium will be a little higher than if you were just going to do something that's not for rental purposes.
I see. And if it is for rental purposes, do you find that gets waived for these purchasers?
Okay, so the way that any insured mortgage works is that an insured mortgage means that the lender has said, we will do this mortgage, but we want it to be insured by one of the three insurers, CMHC, Canada Guarantee, or Sagen. And so there's an added level of requirements because insurers have their own requirements. And when an insured mortgage is happening, there is a premium added to the mortgage. So it's not added to the interest rate. You still have your interest rate, but then you have this added premium added to the mortgage amount.
I see.
And it will be a little bit of a higher premium in the case of this new financing coming out to add additional suites to your property.
Okay, and then in the case of your clients that are wanting to make little mini renos or add these units,
That's two different things, so you know. One is mini rentals to your existing property. You're not going to have any rental aspects. That's one thing. Versus adding a unit, like making maybe you have a basement. Now you're going to make it a rental property, rental unit. That's different than just adding a kitchen that you're going to live in. So the difference being owner occupied only or adding a rental, two different things.
And in terms of the premiums, when people first come to you to kind of wonder what that additional cost is going to be, is there a way for you to gauge and see if,
Yeah. Although with this new one, we may not know 100% for sure what that is yet. But soon we will. In January, we'll have a better idea.
Yeah. Which I'm sure is frustrating for you because I'm sure people, whenever the refinancing is coming up, you need to plan months in advance. So what about the people that are getting refinanced in January? Is there going to be any leeway at all for them to wait what the new rules are before they renew? Or how is that going to play out for people that don't have the answers right away and their refinancing is coming up?
Well, so if it's a case of they're at renewal of their existing mortgage, most people aren't considering that. Like they're just up for renewal, that they live in the property or it's a rental, whatever, and they'll just make their decisions and hopefully shop around for the best options. If they're doing the adding of the unit, then they're going to need to know, yes, they're going to, it's going to take a little longer to give them answers. I can give general answers and my numbers still based on some assumptions, and I'm happy to do that. And then when we know for sure, then they can make their final decisions. But in the meantime, they still can get quotes from contractors and start the process.
So Gretchen, you've been doing this for quite a long time, and I feel like you're the perfect person to ask when it comes to changing trends because you see it. You're the first person to see it. What would you say something that's coming up very recently is so noticeable to you?
I would say people getting into entry-level homes, so under $1 million, who are running into bidding wars because a lot of people have been waiting to get into the market. Rates have come down, so more of these, say, first-time buyers or lower entry-level buyers are coming in the market at once. So some of the sellers are intentionally creating bidding wars by putting a low price out there, hoping to get lots of offers or have a holding offer date. And some people are asking me, can I have no condition of financing? And so what that means is you're not going to give a lender time to review the purchase price, the property, prior to you actually making the offer. So I definitely talk to people about the risks, what they might be. It's really case by case because some clients maybe have very little risk and others might have a much larger risk. So they can make an educated decision of maybe you still have a 3-day condition instead of a 5 business day. Again, just so they have educated decisions. They're not just making a decision, not really understanding how it might impact them.
And how does that assist? Does it assist you or does it make it more difficult for you making that change between?
It's difficult if there's no condition of financing. There's stress, there's pressure because it's, we have either no days and we own this house, we're going to own this house or risk losing our deposit and potentially being sued if we can't get the financing. Right. So it is, more added level of stress for everybody when there's no condition. Not to say you definitely shouldn't do it because there are scenarios where maybe that's worth the risk. Right. To them, to the buyer.
It's so funny when I think the stressful side of things that I hear all the time is always the same day closings. Like you're selling your property on January 1st. That can't be January 2nd. And then you're also purchasing the property on January 2nd. So, sometimes for people that have never been through this process, they always think, how is that possible? How are you going to be able to get it done? But from the mortgage side of things, how do you deal with that same day closings and what other opportunities is there for I guess, both the purchaser and the buyer because they're in both positions?
Yeah. So the plus side of the same day closing is you're not paying what's called a bridge financing. And I have yet to see, I haven't had any of mine at least recently, that in my memory, like have a problem where one of them didn't close and now we've got an issue. So, and these lovely lawyers like yourself seem to make things work, although it can be, I'm sure, very challenging.
You're welcome.
Thank you. Yeah, but there is bridge financing. What that means is that the lender who's giving you the mortgage, so let's say you're getting a Scotiabank mortgage, they're also going to give you a loan to cover the fact you maybe don't have the down payment, or so this is when, you're selling a property, right? So maybe the down payment's coming from the sale, most likely. So you get the bridge financing, they lend you that money you need for the down payment, and potentially also the land transfer tax may be able to be added to the bridge, so you don't have to come up with that money either. And then you can, have 2 properties for a limited period of time, ideally like 30 days, but the longer it goes, the more you pay for that bridge loan. But it is an option, and some people do like to have that, and the realtors inform them as well, like, hey, we could try and just do a bridge, and then you have some extra time for the transactions to happen.
Right. And then in terms of the bridge, I'm sure people ask you, how much is this going to cost me? Is that an easy answer for you to give?
Generally, it's like prime plus 6 or something. So right now is around 11% interest rate. However, you're paying, so if you take the amount you need, so let's say you need $300,000, times 11%, divided by 365 days a year. So that would give you a daily amount. And that amount per day, you multiply by how many days. So depending on how much you need, it could be, I had someone recently with $6,000 for the bridge loan, which was a lot. I had somebody else who was less than 1,000 because it was only one day. So it varies. So yeah, definitely you can figure it out that way. But yeah. And if your lender doesn't offer it, there are people who will offer bridge financing as well. Just bridge financing.
That's great.
Yeah.
So Gretchen, we've been all business so far. But on a personal note, I know you've made a recent career move. Would you like to share
Sure. Yeah. So I've joined Perch Mortgage Brokerage, and I'm super excited. I'm loving it. I made the change because I was really impressed with their technology and their process of how they work with customers. The portal, the platform where customers go in and have ability to get interest rates, see the process where they're at, upload their own documents. So people who like to be hands-on and like to know what's going on, love that. They still have ability for me to be more part of the process if they need the help. And then I have Joey and Rebecca, who are also part of that and helping out, making sure that the documents and whatever is needed is handled really well. And a whole new team of people who are amazing. So I'm very excited about it, and more automation so that people in the process will get emails and alerts about what's happening, like a realtor or a lawyer. So I think it's amazing. Yeah, I'm really excited.
Yeah, and as you know, we also developed our own app here at ALF for that exact reason, to just make it more efficient. So on the files that we're all working together, the team is entirely there. And we're eliminating all the communication of having to call the mortgage broker, figure out what's going on the financing side, and then report back to the client. Or, it cuts down on all of that. Because everyone is just on the same, it's kind of like talking on WhatsApp to your friends, your group chat, where you're all just saying whatever the update is on your end. Everybody sees it, and it's just,
That's really
like
nice.
An ease.
It's the way it should be. That's the way we should all use the ability of all the new technology.
Exactly. Well, Gretchen, thank you so much for being here today. I know you had a long drive. But
407's great.
But for all of our listeners that are looking for your creative solutions to financing, how can they reach you?
They can reach me by phone at 905-579-4412. They can use my link tree, Gretchen Casey, to find the various ways to get connected. Also, Instagram is mortgages.by.gretchen. I love to do a lot of informational stuff on there to educate people.
Yes, you do. Your Instagram is very lively and it's very informative. And I always look out for your events.
Thank you.
And
Can I mention one other thing?
Yes, of course.
My car wrap. I have a car wrap.
Yes.
That's usually on Winchester Road. So if you see a car wrap with lights on it, that's me and Mortgages by Gretchen.
It's such a cute, it's what kind of car is it?
It's a Fiat 500.
Yes. I know it's a
little car.
Yes. And it's a very beautiful and blue.
Blue.
Has it changed now?
It's still blue.
Okay.
And my wonderful marketing husband is part of that, promoting it. And like, there's a mustache on me right now for November. So.
Great. Thank you so much again.
Thank you. Thanks so much for having me and allowing me to connect with you and talk to your audience.
Of course.
This podcast is brought to you by ALF LLP. We hope you found today's discussion insightful and empowering. This is a kind reminder that our content is intended for informational and educational purposes only and does not constitute as legal advice. Every situation is unique. So if you need legal support, we encourage you to book a consultation with one of our lawyers on our website, alfllp.ca. If you enjoyed this episode, don't forget to subscribe, leave a review, and share it with others. For more engaging conversations, expert insights, and practical advice, follow us on social media at @ALFLLP. That's where you can find our podcast, Law That Leads. Thanks again for listening, and more importantly, drive safe.